Definition of SME. A small-medium enterprise is a business that is owned and operated independently, established to make a profit, not dominant in its field, and sells products to customers in the local market. Each country has a different definition of a small-medium enterprise. Type of business is divided into two definitions, namely, small business has a net worth of more than 50 million rupees up to a maximum of 500 million rupees, excluding land and buildings. Medium business is a business entity that has a net worth of more than 500 million rupees up to a maximum of 10 billion rupees, excluding land and buildings. Definition of Islamic financial system. The Islamic financial system is part of the effort to maintain assets obtained and used under Sharia provisions. The core of the Islamic financial system is to prohibit the collection and payment of interest. It advocates risk sharing, individual rights and responsibilities, property rights, and the sanctity of contracts. It emphasizes that funds must be involved in actual economic production activities, and the fair distribution of wealth, and the invested enterprises should also comply with the social, ethical principles. The Islamic banking system is defined as a banking system whose principles underlying its operations and activities are founded on Islamic or Sharia rules. Within the Islamic banking system, there are several agreements. First, Murabahah. Murabahah is an agreement between Sharia banks and customers, and the bank will provide financing for the purchase of raw materials or other working capitals needed. Second is Ijarah. The rental agreement gives the tenants to use the rent, and after the lease has ended, the goods are returned to the owners. But the tenants may also have the items with the option of moving ownerships of the bank's rented property. The third is Mudarabah. Mudarabah is a partnership between the two sides where Sahibul Mal provides capital and gives Mudarib full authority to decide what type and place of investment, while profits and losses are divided according to the initial opportunities. And the fourth is Qardul Hasan. Qardul is the borrowing funds without reward with the borrower's obligation to return the loan principal at once, or in installment within a certain period of time. SME actors have many options in conducting financing, namely by financing through the Islamic or conventional financial financing system. The two types of financing have several differences. We will explain some of the fundamental differences between Sharia cash fund loans and conventional credit. First, interest. In conventional loans, the loans or credit is given on the loan agreement, and thus the debtor or borrower is required to return it together with interest. However, under the principles of Sharia, interest is absolutely not allowed because it is considered usury. Therefore, in Sharia, cash loans do not recognize the principle of an interesting contract, but using a murabahah or sell and purchase agreement, ijarah wa iktina or lease with a change in ownership, musyarakah mutanaksyah or capital sharing. The second is share the risk. In a conventional financing system, the customer fully bears the risk of not repaying the loan. In Sharia principles, the bank as a creditor also bears some of the risk. We believe that from the perspective of risk sharing, Islamic financing is a safer approach for governments, regulators, and financial institutions that consider themselves to be historical innovators, contributors, and society, rather than greedy individual wealth seekers. And the third is various costs. In this case, conventional credit will impose some fees for customers who are late in making installment payments. The amount of this fine has been set from the start and under the bank or financing institution's policy. You will not find the same thing in Islamic credit because it doesn't know the term fine. if the customer is late in making payments, the bank or financing institution will withdraw several funds for the delay. First is fixed installments. In Islamic banking operations, we will get to know the Murabaha financing scheme. Murabaha is a transaction of selling goods by stating the acquisition's price and profit or margin agreed upon by the seller or the bank and the buyer or the customers. Based on the sale and purchase transaction, during the current financing period and the customer's ability to pay is still good, the bank or the seller is not allowed to increase or decrease the margin agreed at the beginning. Second is free of penalty fees if made in full before maturity. Islamic banks do not charge penalty fees if the customers make the payments before the maturity. It is even possible for banks to provide discounts to customers in the form of margin cuts from what should have been paid in full to be smaller, even though the margin discount was not agreed upon in advance. And the third is a fairer profit sharing system. Islamic banks also recognize profit sharing-based financing scheme, or commonly known as Mudarabah and Musyarakah financing. Mudarabah financing is a cooperation agreement between the fund's owner or Sohibul Mal, which provides all capital needs, and the business manager or Mudarib to carry out joint business activities.
Kemajuan yang saya peroleh dari semenjak menjadi nasabah Amanah Ummah itu alhamdulillah sangat luar biasa gitu ya. Hal-hal yang membutuhkan dana yang cukup besar, tentu saya harus mempertimbangkan pembiayaan dari pihak lain. Nah, itu yang disupport sama Amanah Ummah. Akhirnya dana-dana keuntungan usaha bisa saya putarkan kembali ke usaha. Jadi perkembangannya seperti itu ya, sangat luar biasa. Dulu kita waktu sebelum pembiayaan Amanah Ummah itu kita sekitar tahun 2016 itu cuman punya cabang 14 toko gitu ya. Nah sekarang 3 tahun berjalan kita bisa mengembangkan usaha sampai 32 outlet dan ditambah beberapa pusat produksi.
Memilih usaha di bidang penjualan sepatu, sandal, dan tas karena background saya, asal saya dulu pernah kerja di toko sepatu sandal. Dari pengalaman kerja, saya memberanikan diri untuk membuka usaha sendiri. Alhamdulillah semenjak menjadi nasabah Bank Amanah Ummah terasa signifikan sekali, terasa terbantu dengan sistem permodalan yang berlandaskan syariah dengan sistem mudarobah itu atau bagi hasil.
Here we come to a conclusion. A small medium enterprise is a business that is owned and operated independently. Small and mid-sized enterprise or SMEs play an essential role in the economy. They outnumber large firms considerably, employ vast numbers of people, and are generally entrepreneurial, helping to shape innovation. The Islamic financial system is part of the effort to maintain assets obtained and used under Sharia provisions. The core of the Islamic financial system is to prohibit the collection and payment of interest. SMEs face some constraints. One of the main constraints is the lack of funds. Therefore, the bank has a principle that doesn't make it difficult for SME factors in business financing and providing capital. Principles of SMEs financing management. First, administration and requirements are easy and straightforward. The second, closeness of relationship between SME actors and the bank. And the third is building a spiritual consciousness. The Islamic banking system, or IBS, is defined as a banking system whose principles underlying its operations and activities are founded on Islam or Sharia rules. There are some agreements, murabahah, ijarah, mudarabah, and qardul hasan within the Islamic banking system. SME actors have many options in conducting financing, namely by financing through the Islamic or conventional financial financing system. The two types of financing have several differences. The first is interest, the second is share the risk, and the third is various cost. Islamic economic system also provides rational benefits. These benefits can be felt by transacting through Islamic financial institutions such as Islamic banks, Islamic insurance, and etc. These advantages include fixed installment, free of penalty fees if made in full before maturity, and a fairer profit sharing system.